Q1 estimates for the quarter. We have revenue here, which is expected to be $1.8 billion for the first quarter. That's more than what the company brought in all of 2020. So the company earned about $1.2 billion in revenue last year. Reminder, this is just one quarter. They brought in $1.8 billion. Net income, they gave a range of between $730 million and $800 million. So the company is profitable heading into that direct listing next week. The company reported a loss in 2019. So turning a profit in this quarter. They also gave verified users, 56 million people. That's up from 43 million for their last publicly disclosed number in February. For guidance, this is interesting, guys. They gave 3 different scenarios: the high, the mid, and the low. And this is based on monthly transactional users. They say, given the inherent unpredictability of our business, they're providing a range of possible scenarios for the full year 2021. So analysts here will have to do a little math based on monthly transactional users. But again, Coinbase out with their Q1 estimates ahead of a direct listing next week. Back to you guys.
Anywhere from 4 million to 7 million in those MTUs, they call it. Kate Rooney. Kate, thank you very much. We're obviously not showing anything because this is not a public company yet. It is set to go public via direct listing next week. Mike, what stands out to you?
Well, the fact that it is, pretty comfortably profitable at these levels already. It's got very good margins. Again, it's kind of got this 11 or 12% market share, as they characterize it, in terms of just dollars on the platform, in terms of people trading these crypto assets. So it's a very well-positioned company. The question is, what do you pay, assuming that this might be one of the best quarters you can imagine, just given what happened to the prices and the volumes. And it's a very opportune time to go. But I don't know, $100 billion. You talk about adjusted EBITDA, adjusted cash flow in the quarter of $1.1 billion. Can you just multiply that by 4 and then put a multiple on it? That's the big question.
There are a couple of things really stand out to me. Number one, half the assets are institutional, right? Mm-hmm. They've got $223 billion in assets on the platform. 122 of that is institutional. And as you said, I mean, that speaks to the growth, certainly institutionally. But this plays right into your whole thing about as good as it gets versus sweet spot. How could anything be better than this, given the environment that they've been in, with everything going on with crypto and NFTs and all the craziness around that in what has been a raging bull market? Yeah, I mean, I think you'd have to say, if you thought that there were sustainable trends here, is that, yeah, fine, the prices aren't going to do necessarily every quarter what they did this quarter, but if you could have a decent run rate of turnover in this area, and again, it's mostly a lot of just flow trading. It's not just, people deciding to buy a few Bitcoin and put it away. Then I guess that's what you have to sort out here. Also, just a unique spot in this area to be an equity that's going to be listed as a play on crypto digital assets. And I think that's going to probably be the backdoor way a lot of investors, a lot of public equity investors decide that they can participate here, just even if it's a psychological hedge, so that this area does not completely leave them behind. For more, let's bring in Gil Luria from D.A. Davidson. You've had a look at the numbers like we have. What's your initial reaction?
They're spectacular. Unprecedented. I don't know that we can think of a company of this size that grows 9-10 times year over year, that grows 3-4 times sequentially. The growth in the crypto economy was very significant in the first quarter, probably more than most of us even realized. And that's translating directly to fantastic results for Coinbase.
I sort of think about this. Could you imagine a better time to go public for any company? This is like McDonald's going public after we first discovered we loved hamburgers.
That's exactly right. What fantastic timing. They're doing a direct listing next week, and they're reporting these types of results that exceeded probably anybody's expectations. And the momentum in crypto continues across the various crypto assets. So far it's worked out pretty well. It's a pretty good setup for next week.
Sure, but because of that, Gil, as an investor, you can't really extrapolate these numbers into the full growth rate for the year, can you? This was obviously a banner quarter where we saw them, on volumes, on revenues, do more than they have in most of their lifetime.
You can definitely not extrapolate these kinds of numbers. Absolutely not. And remember, Coinbase's revenue isn't recurring. They generate trading commissions. And so when crypto's hot and going up, They trade a lot and they generate a lot of commissions. And on the other side of that, they're going to generate less commissions. It's not like they're comparables, which are recurring revenue SaaS companies that build gradually growth over time. Their growth is not going to be on a straight line. But right now, this quarter was spectacular.
But what's a reasonable growth rate for something that's sort of hard to value? That's what you have to do for a living, right? You have to model it somewhere. So where do you?
That's right. And you really have to start with assumptions about the growth of crypto. And if you believe that crypto is going to continue to grow at the rates that it's grown over the last few years or decade, then it's very substantial. It's really as fast as anything else in technology, but that's a longer term extrapolation. In the short term, it's a very good company that's growing very quickly. And one of the great things about Coinbase is that they're a diversified bet on crypto assets. If crypto assets do well, Coinbase will do well. You don't have to pick which asset it's going to do well. But there's going to be ups and downs for crypto, and there's going to be ups and downs for Coinbase.
Well, clearly that's laid out in the guidance, Gil, which is a range of scenarios, which is sort of unique for Wall Street. They give 3 high, mid, low analysis for how many monthly transaction users, the MTUs, from 7 million to 4 million, which is good, I guess, to get the transparency, but also shows how volatile it can be. So what do you do with that outlook?
Yeah, I mean, we're going to have to create very conservative outlooks for Coinbase. I'd argue that their high scenario is very conservative, but the flip side is their low scenario is quite possible. So there's going to be a very wide range of outcomes, more than other stocks, more than other companies and comparables. And so we're going to have to take a conservative route going forward. And even that conservative route is probably going to be for pretty substantial growth this year and probably into next year.
Can Coinbase's stock work if Bitcoin is falling?
Unlikely. Unlikely. If Bitcoin falls, then Coinbase's results will go with it and it will go down. And so the investors in Coinbase are going to be investors that believe in the long-term viability and growth of crypto assets and just don't want to pick the specific asset. They don't want to decide, do I want to invest more in Bitcoin or Ethereum or a new type of crypto asset? They just want to be in the category. Those are people that invest in Coinbase, and they'll just stick it out for the long term with these ups and downs, and there will be ups and downs.